What's up, guys? In this video, we're going to be covering the #1 RWA protocol in terms of market cap.
Just market cap.
I don't know about utility. Not throwing shade. No, but guys, in this video, we're going to be covering Ondo Finance. We're going to cover what it is, what problem they're aiming to solve. We're going to go through the documents, the tokenomics, the team. We're going to do a platform walkthrough. And then at the end, if you stick around, we're going to tell you guys if we're buying or not and give you all the details as to why. You ready, bro?
Yeah, let's get into it.
I thought you was
Full
gonna say
trans.
more. Okay, go ahead. I'm like, damn, that's weird.
Full transparency already. He's holding out. I'm not that into this one, guys. But look, it's pretty interesting, and I do actually think there is real utility, but there's also no point, which sounds counterintuitive. But you'll see why I say that.
And obviously, guys, we got to come in with the disclosures. This is not financial advice. This is our personal research, our own perspectives, and it should be treated as such. Always do your own research, but just use this channel as a starting point. You ready to hop into this thing?
Let's go.
Let's get it. All right, guys. So here we are on Ondo.finance on their docs. It says their mission is to make institutional grade financial products. I mean, they're not lying there. It definitely ain't for people. And services available to everyone. Okay, they lied.
That's a marketing ploy. We get it. I get it. We get it.
Oh man. So let's just hop straight into their products.
So to sum up Ondo Finance, you can look at it as essentially a protocol in which they carry products that you could generate yield on. That yield could come in the form of treasury bonds, or from treasury bonds. It could come from a stablecoin yield, and it could come from a money market fund as well. And so we're going to break each one of those down, but that's a quick way to sum up what Ondo is.
All right, guys, let's start here with their institutional partners. One good thing about the protocol is that they are working with some pretty reputable firms. So it says, for example, take our fund OUSG, which invests in ETFs backed by short-term U.S. Treasuries. The ETF itself is managed by BlackRock, which is the largest asset manager in the world with 10 trillion in AUM. And the Treasuries themselves are custodied at BlackRock's preferred custodian, BNY Mellon, Citi, JP Morgan, and State Street. And of course, U.S. Treasuries are backed by the government.
So already, I mean, right out of the gate, it's like this seems like a marketing ploy for the most part. When you think about a partner, you think about communication, you think about engagement. Now, to track a certain ETF, correct me if I'm wrong, someone, but you guys don't ever need to talk in order to create a product that tracks a basket of assets. Anyone can do that, especially when it comes to the blockchain. And so to say that you're partnered with BlackRock, I think is very misleading. And it's essentially a fund that they have that tracks the movement of a basket of assets, which is managed by BlackRock.
Yeah, one thing that you'll find in crypto a lot is when they partner with someone, they're basically just using something that they offer.
Small companies, bro. Small companies are the ones that are going to leverage a name because they're trying to grow. A BlackRock, bro, if you're going to work with BlackRock, do you give a shit who they've worked with before? No, you already know, bro. You're good to go. They don't need to advertise that they work with Warren Buffett or whatever on there.
So how do you go about assessing if it's an actual partnership?
I guess you never fucking know unless you know, which is you have some type of inside knowledge. You work for the company. You know
illegal.
That they have a meeting.
Say no,
or
man.
Two companies, like you said at that first point, they're going to have it on this site and they're going to have it on this site. I'm just saying a company like BlackRock, they're not going to have that. Like, I'm sure BlackRock works with like some smaller hedge funds. Bro, if we go to their website right now, we're not going to see 1,000 partners. We're not going to see it. But I bet you they have over 1,000 partners and vendors and all this fucking shit. But we're not going to see 1,000. We may see the biggest ones, like we work with the Bank of International Settlements and shit like that.
All right, guys, let's start going through their products. So we're going to start with the USDY token. And if you hit USDY basic, you can see that access is restricted. This is kind of crazy. You should at least be able to read about the damn shit.
I literally thought the same thing going through it, but I can
like normally you just can't connect to the dApp, but your boy used the burst feature for the camera. I took a picture of just the initial page. Let's go over it. All right. What is USDY? Is US dollar yield token. It's a tokenized note secured by short-term US treasuries. and bank demand deposits. It's accessible to non-US individual and institutional investors, and it's designed to combine the accessibility of a stablecoin with high-quality US dollar denominated yield.
This product is interesting too because it looks like a stablecoin, like it's positioned as a stablecoin. And obviously the yield bearing aspect of the token is the attractive part of the token. I think it starts to get a little muddy once again, the way you word things, right? And so when you say it's backed by treasury bills or US treasuries, I don't know. I think it's kind of misleading still, but you may have some that disagree on this specific point just because the way it works. All right, so you have BlackRock, they own the underlying asset, which is the US treasuries. So BlackRock has aggregated these basket of treasuries, and Ondo has created a token or product which once again tracks the price movement of that basket of assets. And so you got the underlying asset itself, you got BlackRock owning those assets, and then you have Ondo Finance tracking that basket of assets, and then you buy the token, which is backed by US Treasuries. And so I was going to say you're 3 removed, but it's like, damn, you're effectively 4 spots removed from the actual asset. Now, to be real, to someone who's a retail investor who's a little more sophisticated in another country, and they have the countries in which they are approved in, it's actually a very small list. So them saying for anyone, it is once again misleading as well. It's a small list of countries that they're approved in. And for the sophisticated retail investor in those countries, a product like this may make sense because I don't know how difficult it is to buy on treasurydirect.com if you're in Hong Kong or if you're in Russia or whatever. I don't know how difficult it is.
Or one of those tribes that don't have technology. Could you imagine?
But we're going to get to the list of approval. The crazy part is they're not, it says non-US citizens, but it's a small list of countries that they're actually working in. So there's another like marketing ploy in which I keep mentioning because it exists. And that's why like there's a bunch of red flags for me on this project. It's like I do like it still just because I think anytime you could find a way to extend what already exists and put it on a blockchain and make it more efficient or whatever, it's great. But there's just a bunch of small things with Ondo that doesn't rub me the right way.
All right, now another one, comparison to stablecoins. This one's also blocked. Got the picture of this one. All right, it says here USDY is not classified as a traditional stablecoin. Instead, it's a tokenized secured note. Like stablecoins, USDY operates as a bearer asset that can be transferred to investors without their needing to be onboarded with the issuer, although onboarding is necessary for minting or redeeming. However, unlike with stablecoins, USDY holders earn almost all the yield from the asset that back USDY. And they have like a little table here that kind of compares stablecoins to USDY. We can't see all of them because, we're in the United States, but we can see this first one. So it's basically saying traditional stablecoins, if, it's issued by an issuer, Circle, Tether, and if something happens to that company, you pretty much lose your money. They're basically saying USDY is issued by Ondo USDY LLC, and it's a company designed to be bankruptcy remote. Now, they're almost positioning it as if there is no risk. And whenever a protocol, like what was the Anchor protocol?
They set up a separate LLC.
Yeah, they set up a separate LLC. So, hey, bro,
way.
why don't we just set up another LLC and we'll never go broke? That's all we got to do. Man, it makes so much sense. But yeah, I don't think that...
Wait, was that serious?
Of course not.
Okay, you just went back into it. I didn't know. I'm like, man, okay.
Come on, man. So yeah, that is a super red flag to me. And then the one thing that I do like is that they are passing the yield along, like you said here. Other stablecoins don't, and we made a video showing how stablecoins is the best business model in terms of profitability.
If you're the issuer, yeah.
Exactly. So I mean, they're paving the way for other competitors to come and do this right, but still a ways to go. What you think?
I wonder what's the full circle reason as to why companies are getting away from that stablecoin branding. Like they're figuring out so many different names to call their product without using the word stablecoin. And really trying to make it clear that, look, we're not a stablecoin. And I even said it before, it looks like a stablecoin. because most people are going to look at it that way, right? I guess, a question I have actually, bro, the value of USDY, is it stable or does it fluctuate? Do we know that?
If I had to guess, I mean, we can barely read anything on it. I had to screenshot this. I can't even go all the way down. But if I had to guess, it has to fluctuate, bro. Tether and USDC trade a few cents above and below the dollar every single day.
And this is backed by treasuries, which we know appreciate and depreciate in the actual price or value of it. So
it has to be.
Probably.
The only way to have a currency...
Or is it only backed by the yield?
Either way, still. The yield fluctuates.
Yeah, so I'm not sure if this one's an actual... in terms of the value of it, but we're pretty sure it fluctuates. The bankruptcy remote thing is pretty funny too. I gotta be honest. That is a fancy way of saying that. Still, I just think that this is good for the countries. And I would have to ask someone who lives there. Like I said, I don't know how difficult it is to buy U.S. treasuries if you're outside of the country. And even on here, it seems... Don't you have to have a minimum? I think we're going to get to that, but it's like a minimum.
Oh, yeah, you have to be an accredited or a qualified
so this is not for everyone at all, and it changes nothing in terms of access.
It's literally for the 2%.
This provides no access, actually, guys. Just keep that in mind as we go through this.
Yeah. All right, so let's talk about how it works. So it's 3 major processes for USDY. You have subscriptions, whereby which create... Okay. Whereby which create new USDY tokens, redemptions where investor returns tokens on to get their money back, and transfers where you can sell the token on the secondary market or utilize the tokens within DeFi, which is pretty cool. So it says once you complete onboarding, you can choose to deposit funds in 3 ways: US dollar wire transfer, USDC, or USDT.
So I'm sure you guys are starting to see why I have not even mixed feelings. I'm 90-10. I like the fact that they pass on the yield to the actual users of the product. But those users, this is only accredited or more. Minimum accredited. Or a qualified purchaser. I do have to think though, if I was an accredited investor in the country that this is approved in, I'm just trying to put myself in their shoes here. And I'm like, I don't know the other ways for those types of guys to buy U.S. treasuries if they're accredited, but they're not like some giant institution in another country. So this may be easier for them. And to them, this may make their eyes light up. But also, like I said, I don't know the other ways that they carry out those trades. So there could be other ways that I'm just not aware of.
All right. So when we go through the team, they do have a good team. And, I like this part. They talk about cash management and how they manage cash. So they say when you oversee a lot of capital, how you allocate the capital matters, obviously. They basically talk about how stablecoins isn't the best strategy because of inflation. The dollar is inflated even though inflation has been coming down. They also offer treasury management services. And I think their treasury management could be more valuable than these products that they have here on the grand scheme of things. So they talk about the process of cash management and they summarize it in 3 steps. For a company, forecast your cash flow and needs, manage your liquidity to meet those needs, and then revise and update. So they talk about forecasting how much cash you're going to need in the future and going super conservative, like assuming that you're not going to make as much and your expenses are going to be much higher than they are, just as a good stress test. And then they talk about you should prioritize cash management in this order. So capital preservation. I agree with this because once you get to a certain amount of capital, like institutional investors, they're more worried about maintaining. What would it say is harder to maintain than it is to get? You think Ray Dalio gives a fuck about a meme coin? He's trying not to lose the billions that he has. And the fear of loss is much stronger than the desire to gain. So it says, number 1 priority is simple. Don't lose money. And then you want liquidity. So you want to be able to redeem your investments or for cash fairly quickly if you need them for something. And then you want to have your money working for you in return. So they go on to talk about how in TradFi you have options for how soon you'll need funds. 0 to 3 months, you have cash. 3 to 12 months, money market funds, sweep accounts, and short-term treasuries. And over 12 months, U.S. treasuries, like longer-term treasuries. And then they're basically saying that they created their funds so that you can kind of have those same options in terms of time frames within crypto. And they show the funds, they show the yield, and then they talk about, so for the 3 to 12 months, you have the money market fund and OUSG.
So just to super quick sum up what OUSG is. It's essentially the same thing as a USDY, which is another like issue that I take with them. But anyway, it's essentially the same thing. The only difference is it tracks a different ETF, which tracks U.S. Treasuries, but it's still a BlackRock product. It tracks the iShares ETF. So iShares, they usually focus on short-term Treasury securities as well. So it's essentially the same product. It just tracks a different ETF, which carries those treasury securities.
Yep, and if you go to the bottom here, it shows that they provide cash management advisory services for treasuries of $10 million or more. And like I said, I think this probably has some value, unless they're just like, oh yeah, buy USDY.
It doesn't seem like they help you with that. It's maybe they do, and I'm just tripping. But this would be good for like a guy randomly stumbling upon to it who just has a lot of money but doesn't understand what to do with this money. Then he sees this, he's like, "This is perfect." Like in the TradFi, that was a pretty good strategy
Bro, he
for a
probably
guy.
wouldn't even understand this.
Yeah, he probably would struggle reading it, but I guess it's good for nothing then.
All right, now let's talk about the onboarding process. So if you're onboarding as an individual, you obviously have to prove your identity, KYC, all that stuff. They say they approve you in 3 to 4 business days. You have to list pretty much. So you guys know I run a hedge fund. Anytime someone invests with the business, if whoever has 25% ownership or more, they have to fill out the documents. So this is almost like you're actually investing into a hedge fund. In terms of the eligibility, you have to be an accredited investor or a qualified purchaser. An accredited investor, you have to have a net worth of $1 million, not including your primary residence, or have made 200K in the last, I think, 2 years, 300K, including your spouse. And then like they have a bunch of criteria for like institutions, like all this stuff that, I'm probably have to talk to an attorney to get information on. And then a qualified purchaser is a company that owns no less than $5 million in investments, and it wasn't formed for the specific purpose of investing into a fund. So basically like a company with actual revenue from products or services. All right, now we're going to talk about the OUSG token. And this is through Ondo LP, which is Ondo Limited Partnership, aka a hedge fund. So when you invest into a hedge fund, like when I take on an investor, you have a limited partnership. And let's say I bring on 2 investors and they invest 100K each. They each own 50% of that limited partnership. And that's how they calculate like the returns and stuff. And if another person comes on with, let's say, 200K, well, now the 2 investors with 100K own 25% each, and the person who invested 200K owns 50%. But the returns are still the same. What they're doing is adding one extra step to where you own a percentage of the limited partnership, but you get tokens that get you a yield, which is kind of cool. But it's like I would just prefer to go straight to the source if I can. Like we said, this is better for foreign investors if you can do it. And you have to fill out like subscription documents, there's redemptions, all this stuff. Let's talk about their asset strategy. So it says when you invest your USDC or other stablecoins in OUSG, it's 5 basic steps. They exchange the USDC for US dollars, which is held in a bank account. The dollars is used to purchase assets, could be ETFs or funds. You can do that too. And then new fund tokens are minted and deposited into your wallet. This is your limited partnership ownership, which it could be risky. It's kind of like the same. You're relying on yourself to not lose your ownership. Like if I bring on an investor into my fund, they own a percentage in the limited partnership. The only way that things get lost is if I, the general partner, loses it. But in this case, it's almost like I'm giving them their limited partnership tokens, and your limited partnership tokens is the only way to redeem your assets. So if you lose them, you're kind of screwed. So it's kind of just like a pick your poison kind of thing. And then they go on to show the asset exposure, U.S. Treasuries, the target yields 4%, liquidity, daily, risk, AAA. And then obviously they talk about how they want to focus on capital preservation, which we kind of just covered. Okay, so this is kind of interesting. Let's talk about the risk. So it says they currently provide exposure to a single ETF plus cash. So they set their fund rating equal to its estimate of the underlying ETF credit rating.
They track the ETF. Jesus. They literally find the craziest ways to say something. And what they're saying is because they track the ETF, they're essentially going to receive the same credit rating as BlackRock's ETF, which is AAA, aka investment grade. AAA, i.e. investment grade.
We were right in our newsletter. By the way, go and subscribe to our newsletter, guys. It's gonna be fire. Only $11 a month. But in the first article, I wrote AKA, and he's like, bro, that's black talk. You gotta write IE. So I just learned what IE was. But anyway, yeah, they go on to show you like the ratings. Kind of unnecessary, but I mean, I guess it makes some investors feel secure, like they're doing things. But, you know, if you just kind of know what they're doing, it's kind of like, I could have got all this online.
Man, they make it seem so complicated. And it's like, okay, our product is 2 tokens that are live at the moment, which track ETFs, like directly. That's it. There's nothing special to it. You still have to be accredited. And so therefore, if that ETF has a good credit rating, we're going to track it because they have a good history, because we know that means our USG is going to have a good credit rating or a good rating.
One good thing I like about it, you know, we always talk about
they understand finance.
We always talk about the importance of trusting the smart contracts, because you know you can lose everything in crypto. They have a lot of different audits.
I'm sure they're good. I'm sure.
Yeah, back since 2021, they've constantly been getting audits. The audits aren't cheap. What I can say about the project is they are serious. Now they're taking it serious, you know, because like I said, these audits aren't cheap. But you know, I guess if you want to deposit money on this, you can.
If you live in another country in which Ondo is approved and you have experience with them, please leave a comment, contact us, let us know. I would love to know your experience with Ondo Finance if you're a accredited investor and you've used them.
Yep. All right, guys, now let's cover the tokenomics. Important thing in crypto is that it doesn't matter how good or bad the protocol is. If it's a crazy inflation, you know, that's going to affect the price. So
where does the Ondo token come into play?
It's definitely not a governance token. I think it's just you get to own a piece of it. Because even in the docs, it didn't say anything about the tokenomics. But I don't like these tokenomics. I would go on to say they're actually quite shitty. So you can see that the market cap is 726 million. And the market cap is taking the current price and you times it by the circulating supply, you get the market cap. The fully diluted valuation takes into account, and by the way, when VCs or any kind of major investment entity is valuing a company, they always go off of the fully diluted valuation because you want to take into account the entire supply. And you can see that the fully diluted valuation is $5 billion. So it's only 15% of the tokens that's on the market right now. So we need to figure out how the remaining 85% or so of the tokens are going to come onto the market. Normally you can go here on CoinGecko and you can hit tokenomics, but they're not available for this protocol. So we had to do a little bit of extra digging. So we are on cryptorank.io. As you can see here, only 17.6% is unlocked. The rest is locked. And you can see that there's linear locks for ecosystem growth. There's linear locks that hasn't started yet for protocol development. There's linear locks for private sales, and it's linear locks for community access. So the inflation on this token is crazy, actually. Like, it's crazy. And it gives you like all the details as to when the next unlocks are going to be happening. So you got April 18th, there's going to be an unlock, which is going to be 1.6 million tokens. And then you got 1.6 million, 1.6 million, 1.6 million, you know, as you just keep going down.
So they're going to be running at 4 or 5% inflation a year.
Something like that. And guys, if you type in RWA, you can see that. So this is so crazy to me. Ondo is the number one token in terms of market cap across all RWA protocols over Pendle. I honestly think Pendle should be number one, but hey, better for me because that's more we can buy for cheap. So I'll save my opinion on, you know, everything else to the end of the video. So just stick around. But I do not like these tokenomics. Do not like them. You know, come to think of it now, given that most of the tokens are locked, I would go on a whim and guess that the market cap is so high because VCs are holding it. Kind of like Solana. Bro, people don't understand this. There's no reason why this should be number one.
Guys, you know what? I gotta be real. I do not understand why people like this project. I don't get it. If you go through their docs, it's not clear. You got to think about what they just wrote. They talked about basically the same product wrapped in different forms like 4 times. And they say sentences like, whereby which. So to be honest, man, I don't know why people like this project. I really don't.
All right, guys. So now that we went over the tokenomics and we established that, they're not good to our liking, let's do a platform walkthrough. So if you look here, they do have some pretty good backers. That's probably another large reason why people are buying it. A lot of people invest based on the VCs that are backing them, and they're backed by the best: Founders Fund, Coinbase, Pantera, probably A16Z. I wouldn't be surprised. Asset managers, we already kind of broke that down. NAV, this is actually the fund administrator I use for my hedge fund. They're pretty good. And then they get audited. I'm not familiar with the auditors. And then they have people on their team, supposedly that was from Goldman Sachs, Bridgewater, which is Ray Dalio's hedge fund, Millennium, and Maker. And now let's see if we can, we're only going to be able to get into one of these. Let's check these out. So access restricted on USDY, but we broke it down so you know what it is. So this is the one we can get into, OUSG. And if you want, you connect your wallet, you deposit. It looks like you don't have to be KYC for this one, huh? You can just connect your wallet and deposit, it seems like. Oh, no. It says contact to get access. So it gives you the available network so you can invest USDC or USDT via ETH, Polygon, or Solana. It shows the performance. They probably feel like they got some big swinging cocks because the performance been good, but it's really just BlackRock's performance. And then they give you all the ETF details.
Guys, as we're shooting this video, it's 10:53 p.m. And I'm just over here like, I'm excited for my breakfast at midnight that I'm going to make myself after this video.
Oh, we can actually get into this one too, money market fund. But, it doesn't really give you any info other than what we read.
I don't think this one is actually live yet either, even though it looks like it's live. But on their docs, it said coming soon.
Yeah, it must have just went live because I remember only being able to get access to one like a few days ago. Let's go through the team. It doesn't matter how good a product is. You want to look at the team. It's funny they got everything just like black and white. This looks like the guy from Hunger Games who got poisoned at the end.
They got it in black and white, but they have a black and white product and they try to describe it so colorfully. It's like, bro, just say what it is.
Yeah. And where's the CEO? It's funny that he's at the bottom. This guy looks like Peter Pan. I'm sorry.
Nathan Ehrman.
Hey, Nathan, if you're watching this, we talk shit about everyone. We love to have you on the pod. It's not personal. We talk shit about
Hear me out, buddy. Hear me out. Nah.
So yeah, if you click on his LinkedIn and look at his experience, founder and CEO of Ondo for 3 years, worked in the digital assets department at Goldman Sachs. He's a partner at Chain Street Capital, an associate at Prospect Capital Management, and he got his MBA from Stanford. So if this thing is going to be successful, he's probably the guy to do it, it seems like. And then another guy on their team, Chris Terrell, he has some pretty good experience as well. He's the chief compliance officer for EDX, and he was the head of America's compliance for blockchain.com. And he was the VP at Goldman Sachs for over 5 years. Yeah, so I'm not gonna go through everyone's, but they do have a pretty strong team. Maybe they need to not be so black and white and come together and get creative.
Right, get some diversity.
So now let's, for the good part, if you stuck around, are we buying this and why? My answer is hell no. I'm not buying it. Ondo team, I love what you guys are doing. But to be honest, I'll give you every reason why I'm not buying this. There are other projects that I feel like make way more sense, have a better following behind them, are more undervalued. Remember, this is the #1 project in terms of market cap. I don't like the tokenomics. It's a lot of Ondo that I have to compete with in order to get some price appreciation. I do think it will pump in the bull market. Don't get me wrong. Everything is going to pump. A rising tide raises all ships. And then also, for a product like this, I think it has to be successful in the U.S. to a certain extent. This is partly regulation's fault, but it's just so many things going against this project, and I'd rather just go and buy the treasuries alone. Like the yield on 1 month treasuries right now is 5 point something %. I don't have to worry about fees. I don't have to worry about buying a stablecoin and doing all this stuff. And I love crypto, but it's way easier ways. Like they had a 5% APY on there. You can get 5% per month, compound that. And if you're a qualified purchaser and accredited investor, guys, you're making hundreds of thousands, potentially millions per month.
That's true. They're only passing off 5% of the yield. Wait a minute.
That's what I'm saying.
They invest in, they said T-bills, short-term treasury securities. That's less than a year. So they got 1 month, 2 month, 5 month, and they're passing on 5% of their 30% that they get. Oh, so noble. And in terms of me buying it, what the hell y'all think? No, I ain't even gotta say it. I'm not gonna say it. You know what? Let me be real here, guys. I always like looking into projects like this because I always think it's important to just get a huge swath of what works, what doesn't work. Like even when it comes to conceptually or practically, you just need to have a good idea of what works and what doesn't work. And a project like Ondo Finance, say we get another project in the near future and they have something sort of similar to that USDY, but they actually buy the treasuries, they keep them off chain, and then they track the value of the basket of treasuries that they own with that USDY token. That is one removed from BlackRock. It seems a little more transparent. And overall, that would be a lot more interesting versus saying, hey, you know those treasuries that BlackRock collected, put into an ETF, and that they own, we have no ownership in? Okay, now you could go buy it from them. How about you buy a tracker of that basket of assets from me and get less of a yield? Does that sound good?
That's basically what they're doing.
Exactly. So,
and one more thing, guys. Well, actually, two more things. The first thing, I wore this shirt, Intuition Systems, because it's not intuitive. The second thing is, they were kind of trying to shit on stablecoins. And I will admit, this is like an evolution in stablecoins because holding USDC or holding USDT, you get absolutely nothing. At least on here, you are getting something.
The worst version of a stablecoin.
I'm going to get into that.
Okay.
You're not getting nothing from holding a stablecoin, but there are ways where you can get a reliable yield holding USDC and USDT via yield farming, which we show you how to do. If you want to learn more about that, click the link in the description, book a free strategy session. Ding, 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 ding. Yeah, but the thing you have to keep in mind is that it's a lot of liquidity for USDC and USDT where you can go stake it. You can get 4% single side staking on Stargate Finance right now, paid out in Stargate, right? You can go on Uniswap v3 and provide liquidity for USDC and USDT in a tight range and get over 4%. There's been times where I've gotten 40% APY. The USDY is not going to be able to be staked or used in pretty much any dApps because it's inside of a fund. So while they tried to say, oh, you can use it inside of DeFi apps, that is possible, but it's not practical because go and try to find a DeFi app where you can stake some USDY and get a yield on it. You won't be able to find any.
And you know what? That actually, we did a review on this one too, or a breakdown. That was more of a discussion, but we did one on Athena. And Athena is another protocol that, it's basically yield-bearing products. And I like the way they do it. They pass on the yield too, the full yield. So you're sometimes, if you're depending on the backer, you guys can go watch that conversation, but like depending on what position you play in the protocol, you could generate up to 30% APY.
Sometimes over 50.
Yeah, it's been over 50 at times, but that number, it always fluctuates within Athena. But even the way that the value management is handled in terms of long versus short positions, just because most people are generally long, if shit happens, they'll basically like bring the shorts up and the yield comes back to normal, or that funding rate. Like I said, go watch the Athena conversation. You guys will get it. But anyway, I would much rather, deal with something like an Athena over an Ondo, hands down.
Yeah, you don't have to get KYC to go on Athena or go on Uniswap. And KYC is not bad, but if I'm going to jump through hoops, it better be some damn treasure on the other side of it, not a hole.
Exactly. And they actually pass on the yield, man. And they're not like running some ploy like, don't get me wrong, Athena is very complex. But they're not running some ploy where it's like we're tracking a basket of goods and you generate a small portion of the yield that we generate. and that's our democratization aspect. No, Athena's like, hey, we got this complicated ass protocol that says if the funding rate gets too low and it starts to go negative because it's too much demand on the buy side or on the long side, then they would have to increase short positions or incentivize people who short to start accumulating more of a position to bring that funding rate back up. So that way the funding rate is never negative and backers are always making money. And so they have little protocols in place to assure security. Ondo is just tracking BlackRock's ETF. It's very simple. That's all it is. And it's not available to anybody.
Guys, last thing. You can buy USDC, like people used to say back in the day. And I'm not condoning that you trust a centralized exchange by any means, but you can go on Coinbase. In our stablecoin video, we talked about how when you buy USDC, Coinbase, or Circle rather, takes the dollars and they go buy treasuries. You can go on Coinbase and get 5.10% APY right now. Higher than Ondo. And you don't have to, you have to get KYC on Coinbase, but you don't have to be a credit investor. You don't have to do all of this shit. You don't have to sign subscription documents and limited partnership agreements and all these documents that you have to fill out for a hedge fund. You can literally have your money on Coinbase and get a higher yield for a lower barrier of entry. BlackRock trusts Coinbase, right?
For a super black and white product, meaning
this is not competitive. Ondo, they're not competitive.
100%. It's a stable coin. We know it's backed by US dollar. We know it's government coin.
You can take this and send it off of the exchange and actually get a yield on it.
Bro, if you show your uncle USDC, if you show him somebody who knows nothing about crypto and he's worried about taking crypto, if you show him USDC, tell him what it is, he's just going to think that's the dollar. He's going to be like, all right, that's cool.
Yep. Not USDY. Why? It's like, why I got to fill out all this stuff to get some dollars?
And bro, from experience, I use USDC because sometimes I always have money on the exchange, right? So sometimes it's good to go back into USDC. That makes me feel like it's real money. Like it really does. Like when you own it, it feels the closest to me. Out of any stablecoin I ever held, USDC feels the closest to holding money.
Yeah.
It does. It really does.
Yeah.
And I'm comfortable holding it for a while because I know I remember when BlockFi was out, this is before the crash, I pulled all my money out, by the way, so I didn't lose any money. But anyway, holding on BlockFi, we were generating 8.6% on USDC. Bro, I was so comfortable and I'm a guy, I'm not that comfortable just leaving my money in some stablecoin. I gotta be real. USDC, they do a good job. I never thought about that. From a comfortability standpoint, I was good. If I had it in USDY, to be honest, bro, I would be checking it like way too often. Be like, all right, I'm gonna just go ahead and just remove this, take this out.
Seriously.
Just because I something like that, I don't know. It's like I don't think they would fail, but I don't know. I just don't trust them.
Yeah.
Even just read through their documents, they're like smoke and mirrors.
Oh, lastly, Ondo team. We love that you guys have the balls to try to do something like this. We appreciate the work ethic. You guys raise money. You guys are doing the damn thing. Nothing but respect for you guys. And we welcome you guys to come on here and chat with us. Maybe we're wrong. Maybe we're just tripping out. Maybe we don't understand something. So we would love to have you guys on and break it down. But other than that, we thank you guys for tuning in. This was our honest review. If you got value from this, if you have comments, questions, concerns, leave it in the comments. Subscribe for more video updates. Share with a friend who's curious about Ondo. And with that, we thank you guys for watching, and we'll see you in the next video.
Wait. Go tell that friend right now. We'll wait. All right, you did it. All right, yo, make sure you subscribe, and we'll see you on the next one, like my boy said.
Peace out.